So hi everyone, my name is Allison Colton. I am the manager of the on-site advisory department here at KWB Chartered Professional Accountants. Our mission through on-site advisory is to provide our insight to our clients' businesses by working with them on their business. So we do this in large part by teaching our clients how to move their focus from being reactive to being more proactive, and by helping them use their financial information to make better business decisions every day. So that is, of course, what we're here to talk about today. So just a bit on being reactive versus being proactive. So many business owners, especially in the beginning, operate their businesses in a very reactive way. This isn't necessarily wrong. It's just kind of the way that it ends up being in the beginning. So this looks like making decisions on the fly, only looking at your financial information periodically, maybe once a year, maybe a little more often, but not really on a scheduled basis. More driven by when it's time to file taxes, usually. And then managing cash flow kind of on a day-to-day basis. How much money do I have in the bank account today? Can I afford to pay this or not? They're making the best decisions they can in the moment, but it's often it gets to be a little stressful, and there's some panic involved when things don't exactly work out as planned or expected. So this has only gotten worse in the last couple of years, of course, as we live through this lovely pandemic that we're hopefully coming out the end of. In the beginning, especially, things were changing on a daily basis, if not hourly, and it really wasn't possible to be very proactive during that time. So now that we're hopefully, like I said, coming out the end of that, I probably need to knock on wood for that one as well. It's kind of time to turn our minds back to being a little more proactive and looking into the future a little more. So like I said, that is our focus at On-Site Advisory, is helping our clients to kind of shift their focus into the future and using their financial information to make better business decisions. Looking into the future with an eye on the past is a really powerful way to elevate your business decisions to that next level. So building a business roadmap based on the information gathered from the past and looking into the future will help you reach your goals faster and maybe even enjoy the journey a little bit, which is kind of everyone's goal at the end of the day. It will also allow you to know if you're on the right path or if you've veered off course, and get yourself back on the path that you want to be on. So that's what we're here to talk about today. We're going to talk a little bit about what healthy financial books and records look like and why they're so important. We're going to have a look at some tools that will make your life a lot easier in that department. Look at some best practices for data management, and then look at some reporting for decision making and how you can use that to analyze alternatives and identify the best path forward for your business. And in the end, we're going to have lots of time for some questions and answers. If anyone thinks of anything as we go, just jot it down and we can circle back to that at the end.
I'll also be monitoring the chat box. So if there's something, if you don't want to interrupt Allison as she's going and you want to ask something, throw it in the chat box, and I don't mind interrupting her. So
he's used to it.
if you think of anything and you want it, a lot of the time it is best to address it then, and if you're thinking about it, probably others are as well. So yes, don't hesitate to throw things into the chat box as well.
All right, so having a look at your financial information. The financial books and records of your business are really the foundation of your day-to-day business decisions. A lot of business owners put their bookkeeping off because it's time-consuming, daunting, and downright painful. We hear from lots of people. This leaves them with a really big job at the end of the year when comes time to get everything ready for us to prepare their tax returns. And more importantly, it leaves them really guessing throughout the year as to the financial situation of their business. So healthy books and records are accurate, up to date, and therefore they can be relied on to make those business decisions with. They're there when you need them, and they'll assist you in providing the necessary information for making those day-to-day business decisions. Maintaining financial records, healthy financial records, is just as important as ensuring your business equipment is in good working order, for example. Just as you wouldn't wait until something breaks down to perform that routine maintenance, you shouldn't wait until the end of the year to get your bookkeeping records up to date. Luckily, we have a lot of tips and tricks and things we've learned along the way working with many clients over the years that will help make this a lot less painful for you. So QuickBooks Online is the first one that I wanted to kind of address for you. Also affectionately known as QBO, which I'll probably refer to it as throughout. This one can be a great solution to take the pain out of your record keeping. So this is a cloud-based accounting platform that syncs to over 450 apps to deal with things like document retention, payroll, invoicing, inventory, and much more. This customization allows you to create a comprehensive system that is perfect for your unique business. Moving your books into the cloud has many benefits. So it gives you the ability to work from anywhere, access your financial information on the go. The program will connect with your bank and pull in your transactions automatically, and you can set up bank rules so that the program automatically knows how to classify certain expenses to further automate the data entry process and gain back valuable time in your day. Security, which is a big concern for a lot of people when you're moving into the cloud, is built right into the platform. And it takes the need for routine manual backups of data off of your to-do list. Dext is one of those many apps that connects to QBO, and this is a fantastic program for helping simplify your document retention processes. It digitally manages your receipts, bills, invoices, and other documents that your business depends on in a secure cloud-based filing cabinet. You can upload all of your documents to the program via email or the app on your phone, snap pictures of your receipts on the go, and have them filed automatically and synced into QBO. So I'm going to demonstrate quickly for you how this works. This is an expense transaction in QBO that has been posted from Dext. So you can see here that a PDF copy of the receipt, if you look in the lower right-hand corner, has been attached right to the transaction. So from within QBO, you can then click on that link and it will show you the PDF copy of the receipt. Moving over to the Dext app, you can see that the business owner in this case has simply snapped a picture of the receipt on their phone camera. And then this was sent into Dext either via email, like I said earlier, or from within the Dext app on their phone. The program automatically recognizes a lot of the information here. The fact that it's a receipt, the date of the purchase, who the supplier is, in this case, Home Depot, and the amount of the transaction. It even recognizes automatically how much GST was included in the total price, and will break that out automatically in your bookkeeping. And it will automatically give a suggestion based on past transactions and how the settings have been set as to where to code it. So in this case, it's suggesting that this would go to the purchases account. The more you use Dext, essentially, the smarter it gets. So once you kind of tell the program, when I make a purchase at Home Depot, I want it to go to purchases every time, it will continue doing that until you tell it otherwise. You'll then have the opportunity to review everything and make sure. So for example, if you have put the settings in that everything at Home Depot should go to purchases, and then one day you purchase something and you want it to go somewhere else, you want it to go to repairs and maintenance in this case, you will have the opportunity to manually change that before posting it into QBO. So you still have the opportunity to review everything. You're not totally 100% relying on the technology, which is always a good thing. You can see how this tool will help further automate your record keeping processes and let you get back to working on the things that are most important in your business. There's no more shoebox full of receipts at the end of the year. There's way less data entry throughout the year, and it really eliminates a lot of the opportunity for human error. So you don't have those data entry errors, the transposition of numbers and that kind of thing. The technology really takes care of all of that for you. So once you have your cloud accounting tools all set up properly and your bookkeeping is automated, more automated anyways, and up to date, then you can start using your financial information to help you make those business decisions. Bookkeeping is definitely about more than simply recording the transactions, and leveraging tools like QBO and Dext will really help take the stress out of reporting on the past and allow you to then shift your focus into the future. And ensure the accuracy and usefulness of your financial records. So looking forward a little bit into some of the financial reports that you can then make use of. Reviewing, in general, just making a habit of reviewing those financial reports on a more regular basis, more than just when your taxes are due at the end of the year, more on usually a monthly basis is what we recommend at least. That will help you kind of keep the finger on the pulse of your business, allowing you to make more fully informed decisions about the future trajectory of your business. So like I said, we recommend that you have a look at your profit and loss and your balance sheet at least monthly. If you're thinking, I don't really know how to read those reports, I don't know what I'm looking at, the biggest advice I can give you is just start. Once you start looking at them on a more regular basis, you will start to become more familiar with the meaning behind everything. And of course, we're always there in your corner to help interpret if you need. Reviewing your reports routinely will not only help you identify errors before they get to us at year end when it's time to file your taxes, but it will also help you become more intimately aware of what's going on in your business. So how profitable are you month over month? What are the cycles of your business? And you'll soon start to spot those trends and anomalies in your data. And that's the first step towards becoming more proactive. So looking at this profit and loss report, the telephone and internet business expenses in this cafe have increased by 225% in November over October. So that leads me to ask why, essentially, what's going on here? Maybe this business is paying for telephone expenses on behalf of its employees and someone needs to go have a look at what's going on there. Maybe something was paid twice in error. Rent has also doubled during this time. So questions like, was there a double payment made on December's rent by accident? So knowing about these kind of things sooner rather than later is definitely helpful. It gives you a faster reaction time, as well as helping you manage your cash flow in a more real-time manner. So looking for trends and tracking some of the key numbers in your business over time can also be really helpful. This allows you to spot those trends, of course, and be prepared ahead of time for things that you know will be coming back around in the future. So here we have a graph of total revenues and total expenses over a 4-year period for the cafe that we're looking at. We can see that the business experiences a drop in revenue in early summer each year. So every June leading into July, we have a revenue drop going on right here. But the expenses, they don't drop accordingly. So in fact, there seems to be kind of a spike in the expenses about every quarter, which is probably something that needs to be reordered on a cyclical basis. This kind of information can lead to a discussion about, is there something that we can do to smooth this revenue out? Possibly a promotion timed just right each year to help out with that June-July dip. It also will allow the business owner to plan for cash flows and funding the cash flows that are still necessary to run the businesses through that dip. Getting financing in place from the bank if necessary, things like that. So once you start to gain more insight into the regular cycles and trends in your business, you'll be in a great position to start building an annual budget. This can be a really effective way to enhance your financial reporting. So a budget is a financial picture that is typically built on a 12-month basis. It's used to determine what you can expect over the course of the coming year, while factoring in the operational activities that you already know about and any new initiatives that you might be planning. This will give you a benchmark that can be used to compare your actual performance against each month. So things never generally work out exactly as planned, but if you've got a plan in place and you have something to kind of compare your actual results against every month, it gives you it just gives you a benchmark to know whether you're on that path or whether you've veered off and need to make some course corrections. Looking at your profit and loss each month, line by line, and thinking about each item that's over or under budget can, again, create some really meaningful discussions about the whys behind each of those variances, and allow you to decide what you're going to do to kind of get back on the path. Or maybe you decide you have a new path partway through the year, and you know that a little bit ahead of time rather than looking back in the review now. Another really meaningful report that you can generate once you have that budget established is the projected annual profit and loss. So here we have the actual results of this business up to the end of November, and then we've put in place the budget in the future months. So we can look out and we can say, okay, we are projecting an annual operating profit of just over 2.7 million for the year. And then we can think about what we had budgeted for the year and why we're coming in different and what we need to do to meet our goals by the end of the year. This will eliminate any surprises at the end of the year and again, allow you to take action before it's too late. So looking at a forecast, this is similar to a budget, but usually it encompasses a longer time frame. So 3 to 5 years generally. Because it allows you to look further into the future, you have the opportunity to plan for different scenarios and compare the financial impact on different decisions you may be considering today. A forecast gives you a bigger picture of the financial future of your business and shows how operational changes made now might affect your business in the long term. Forecasting can be used in order to run different scenario analysis and give you a bit of a crystal ball as to, and help you make those educated business decisions. You can play with the timing of implementing different changes to your business in order to build the most effective strategy for your business. So in this case, we're looking at a cafe business. They are that same cafe business that we were looking at a little earlier. They're planning on implementing some changes in the new year. So they're planning on hiring a barista, purchasing some new equipment, and implementing an Instagram campaign. So this allows us to play with the timing of these decisions and see the effect on both the revenue and the cash flow of the business over the next few months. Just a bit on cash flow while we're talking about budgeting and forecasting. So budgeting and forecasting offer insight into the overall revenues and expenses in the business. Cash flow management focuses more on the actual movement of money in and out of the bank account. So while the budget and forecast may place revenue in the month where the invoices are issued and expenses in the month that the items are purchased, your cash flow report will place those amounts in the month when the money actually comes into the bank and leaves the bank. So this is a visual representation of the cash flow for the month of November for that advertising agency that we were looking at. You can see that we begin with the cash generated from the revenue and paid out for expenses. We then adjust for the actual timing of the cash coming in and out of the bank account by adjusting for accounts payable, accounts receivable, the changes in the other liability accounts, and some asset accounts, inventory, work in progress, etc. So this gives you an idea of whether or not your cash flow is positive or negative for the month. So operating cash flow is the cash flow generated from the operating activities in the business. Free cash flow is then adjusted for activities that pay for the future investment and growth of the company. And then net cash flow is the cash flow remaining after the business pays for its financing arrangements, such as interest on loans or dividends to the shareholders. So we can apply these same adjustments in conjunction with your budgeting and forecasting, and that allows us to project out the cash balances going forward. So this allows you to help make those financing and collections decisions. So do you need to have more financing in place to fund the activities that you're planning over the next couple of months, or are you going to have an excess of cash and you don't want to just leave that sitting in your bank account? You want to put that to some better use, whether it be making additional investments or a short-term kind of higher interest account of some sort. We can also look forward, because like I said, even though we're providing you a little bit of a crystal ball here, it's not ever going to be perfect. So a lot of the time we want to look at different scenarios. So this is best case scenario, this is worst case scenario, and kind of what's the swing there. So in this case, you can see that we're projecting out cash for this business. The best case scenarios, they're going to have about 2.25 million on hand. The worst case scenario is that they're going to have about 1.7 million on hand. So that gives them kind of a ballpark, what's safe and what we're shooting for. So the power of one. Small changes can make a really big difference in the bottom line of your business. So using this historical financial information, you can then kind of start to pinpoint what the areas are that you want to focus on and what's going to have the biggest impact on your business. So looking at this business example that we have here, in this case, if they were to decrease their cost of goods by 1%, that would provide an increase to cash flow of just over 56,000 and an increase to profit of almost 47,000. Similarly, if they were to increase their payables cycle by only 1 day, that provides them a cash inflow of just about $13,000. So you can, using your historical financial information, you can kind of play around with a lot of these variables and decide what the best use of your valuable time is going forward. Does anyone have any questions that came up while I was going through all of that?
Thanks, Alison. Lana had one. I think I responded in the chat. But Lana, did you have any follow-up to that? Or actually, Alison, maybe she was asking where all those reports were coming from, and I said that it was from Fathom.
Yes.
But does QBO, what does QBO have that's similar? I know we like Fathom because we're already using it and we've paid
definitely
for
so
it.
Fathom makes them a little prettier for sure. QBO does have a lot of the similar reporting capability. You can really play with the reports inside QBO to get those variances to pop out at you in either a dollar variance or a percentage variance. So a lot of those reports that we were going through, I'll go back here actually. So this one, you would absolutely be able to recreate the profit and loss with a comparison to the budget. You can set a budget in QBO, or if you wanted to compare similarly and have this comparison column being, say, the previous period or last November, same month in the previous year, for example, you would be able to do that. And you can set it to either show you the percentage variance or the dollar variance or both.
That's awesome. Thank you.
Yeah, and if anybody needs help with that, let us know. I mean, it's, you know, once you've done it a couple or 3 times, it's pretty straightforward. But I know navigating anything new in QBO can be a little bit, you know, fearful. So if you need, you know, we've either got a video we can send you, because we tape or we record a lot of those instructional videos sometimes. So we might be able to just send that over to you, or just help you for 5 or 10 minutes. So easy enough for sure.
Definitely. And another thing to keep in mind when you're playing with those reports is you're not really affecting the data when you're playing with those reports. So feel free to play around, make it try to make it do what you want it to do. And if you can't do that, then give us an SOS call, and we're always happy to help.
Sounds good. We just switched over to QBO a few months ago. Is Fathom something that you would recommend, or would you just say, you know, get your feet on the ground with QBO and then look into Fathom down the road?
Yeah, I would definitely get your feet on the ground with QBO. Fathom allows us to do some more of that fancy stuff that we were looking at later on with the scenario analysis and that kind of thing. Okay. And projecting out into the future, definitely more powerfully than QBO will allow. But once you get your feet on the ground with the QBO reporting, then you'll be in a much better position to move into something like Fathom.
One of the other things that we've started to use Fathom for is developing key performance indicators for companies, right? So, you know, depending on what your company does and what some of the key things are, you can set it up and say, okay, well, my job orders from the previous day or last week, that'll help indicate what next month's revenue is going to be, or you know, how busy the guys are will help indicate what tomorrow's revenue is going to be. So, you know, you can start developing things and even tracking things in QBO, which Fathom then mines to basically give you some dashboard reporting. You know, maybe every morning you look at something, or every week, every Monday morning you look at something for the week, and it gives you an idea of what's going to be happening. So it really helps you take control of running the business, working on it, instead of letting it, you know, run you, right?
Sounds good, thanks.
What other things? And they don't have to be questions. Is there a topic area? Because we do have, you know, good 15 minutes or more. Are there topic areas that you guys wanted to see today that we haven't seen yet, that you'd like to talk about? And maybe we can jump into something, or at least discuss it.
When you're looking at the reporting, like I liked how I mean, obviously, if there's something that's gone up exponentially, you know, that's a red flag. Are there any other kind of red flag indicators that you guys would recommend when we are looking at our reporting? Like, aside from those very drastic indicators that you would see, is there anything else?
Allison touched on it. I personally really like to compare actual to, you know, the plan, you know, whether it's called the budget or the forecast or whatever, right? So, you know, I think a fair bit of work and effort, if a fair bit of work and effort goes into the plan, then it gives you a good idea of where you expect to be and where you should be. And when you start to, you know, move off of that, that gives you some excellent information, whether it's on the sort of negative side, like you're not hitting targets, or you're exceeding targets, because then it's like, oh, wow, maybe we need to accelerate our hiring. Maybe we need to, you know, do something else that's different. Look at our banking, look at our cash flow. So I think mapping your plan out and then making sure, and QBO does have that capability where you can enter in a budget and then run budget to actuals every month, every quarter, however frequently you want to. And to me, other than, like you say, the variances that from maybe the previous month or the previous year, I think those are very, very good to use.
Yeah.
And I guess the other area is she pulled up the income statement. So that's your expenses and things like that. But I mean, I would certainly take a look at your balance sheet as well, focusing on cash and trends like what's receivables done, what's payables done. You know, if receivables starts climbing 10-20% each month for a month or 2 or 3, you start to wonder, okay, what trend is going on here? Are, you know, we getting into an economic slowdown? Are my customers holding back their payments because they're concerned? We actually saw that at the start of the pandemic, that a lot of companies started having to react to the fact that there was a lot of fear out there. And for a month or 2, receivables slowed down a lot compared to, you know, previous. And then once the fear sort of subsided and everyone went, okay, I'm getting paid, so I can pay, you know, and the whole cycle continued, it wasn't so bad. But for a month or 2, there was some real fear out there, and it affected receivables. So just help people sort of understand that better.
How many hours would you spend on, like, if you're, I guess it depends on the size of your business, but in general, like you're doing a monthly kind of scheduled reporting and budgeting sort of session, like what would you think a minimum spend would be like generally for this type of thing?
It really does depend on the size of the business. So anywhere from, you know, once you get these reports set up in QBO, and you can automatically just kind of click on the report and it will pull it up for the period that you want to look at. It can be done in as little as an hour a month. If your business has a lot more volume, sorry, you're going to want to dedicate a little more time
Right.
as things grow.
Any other topic areas? Donald, Roger, Lana, anybody? Heather?
Are there any other apps on the, because you said there's 450 apps that connect to QBO, like that's a lot of apps. Like, are there any that kind of stick out that you think are important? Or
there are a ton of apps, and of course it also varies greatly depending on the type of business that you run. So there's lots of apps for managing inventory, managing point of sales systems,
Payroll and timekeeping.
Yeah.
There's mileage apps even, right? You got employees that are driving around. You know, if you bill your clients or, you know, for mileage, then they track that if they're using their own vehicles, and so you need to reimburse them for their vehicles. There's, you know, you can use the apps for that. There's payment apps. So, you know, we use one and lots of our clients use one called Pluto, Plooto, and it helps facilitate payments to subcontractors or suppliers, or receive payments from customers, especially if they're ongoing or periodically recurring. That makes it easy. Basically, it's like a bank EFT, but cheaper and easier once it's set up. So, and ties into your QBO. So, you know, that's why a lot of these are so great, because not only do they do what others might do, but they almost always, or I think they always do, inevitably tie into your QBO, so that at least the initial transaction is recorded. Sometimes you've got to make a small change to what accounts affected or that kind of a thing, but there's much less chance of human error, you know, data entry error, that kind of a thing.
Would it be possible for you guys to put a little list of apps that you have tried or that you like that do tie into QBO, that we could, as business owners, could look into, instead of, you know, you've already spent time doing that, instead of us doing the same? Would it be possible to just get a little list of those?
Yeah, that sounds like if we don't, I don't think we have it already, but Samantha, that sounds like a great blog article that we could post fairly easily, because I think you already pretty much have that from some other work we've done with Shelley, right?
Yeah, absolutely.
And then once it's done, maybe grab Lana, you could email that directly to Lana or to everybody on this call if they'd like.
Yeah, sure.
Lana, in your business, one you should definitely be looking at, if you haven't already, is Jobber.
Okay, what's that one?
That's a workflow or job management, billing, invoicing, collection program. So
Awesome.
and ironically, it developed here in Edmonton, but now, you know, they're national, maybe even international now. But so basically, it allows you to, if you've got the hardware, for anybody that's going out in the field, they can go out. Well, it can be scheduled. First off, calls can be scheduled out. Then they go out into the field. They can look at what work needs to be done. They can quote on the job right there. They can get approval right there. If they want to, they could potentially start the job. They could invoice it on site, and if it's hooked up to payments, potentially even collect it on site. So it makes it so much more efficient than going out and quoting and coming back to the office, and then going out another day and doing the work and coming back to the office and billing another day and getting cash in. You just, the efficiency is amazing. I had a client that was in the overhead door, or is in the overhead door business, and probably saved them 20-30% in efficiency.
Right. So we don't we don't do service calls or small stuff. We do large commercial construction.
Okay.
Would that be applicable to that, or not?
Possibly still.
Okay.
Or there's other apps. Like, I don't know what you're using then to do your estimating, quoting, approvals. But if not Jobber, although I think Jobber might work, but then there'd be other ones that might be even better than Jobber for that type of work.
Okay.
And Alison, I don't know if you're familiar off the top.
Nothing is popping into my head right now, but yeah, there's an app store kind of ecosystem in QBO, and you can search by functionality that way.
Yeah, and of those 450 that Roger mentioned, I mean, there's probably 20 or 30 categories, right? So, in the area of job costing, there might be 30. In the area of payroll, there might be 15 or 20. Like, so, there's lots of, and they're all, slightly different and geared for slightly, there might be one that's specifically for property management, and there might be one specifically for law firms or something, right? So each app is developed and then often focuses on a niche or two. And then that's why there's so many. And so, that's the beauty of, if you can find an app that's specifically meant for your type of business, often it has a lot of the features that you'd like to see.
All right. Well, if we don't have any more questions, I will, actually, I should have brought this up already. I will leave you with my contact information. So we offer everything from business coaching to help you understand how to do these things yourself, to full outsourced controller services. And one of the things we'd love to do at On-Site Advisory and KWB, for that matter, is customize a package that will work specifically for your business, with just kind of like those apps will zero in on what exactly you need. We can do the same. So this is my contact information. If you have any questions going forward on how to implement any of this stuff or need a hand with anything, we're always happy to help.